China, a real economic collapse. The largest developer in China, Evergrande, has ceased to exist, marking the end of the construction boom era, which will definitely have an impact on the country's economy. On Monday, the Hong Kong Stock Exchange officially delisted China Evergrande, one of the largest delistings in terms of value and volume in recent years. That's how the business press puts it. The exchange closed the chapter on the developer's shares, whose collapse became a symbol of China's real estate bubble and resulted in huge losses for investors. The delisting of Evergrande marks the end of a turbulent saga for the market, for politics, and for the millions of Chinese people who kept their family savings in those very square meters. And this will also hit the Chinese economy very hard right now, because the construction and real estate sector in China accounts for almost a quarter of the country's gross domestic product, and this sector has really collapsed. Let's break down this whole story in this episode. So what is it about? Let's quickly note what happened, why it happened now, and reconstruct the timeline. It goes from the 3 red lines of 2020 to the court decision on liquidation and today's delisting of Evergrande. Let's analyze how Evergrande created a hole in China's economy, from banks and local budgets to household demand. And what does the outcome mean for Beijing's policy, which ended in collapse? Many people asked, what's happening with Evergrande? Those following surely remember this story. So, my name is Alexi Pichi. Today is August 27th. Let's break down this situation step by step. But before we start, I ask you to subscribe to this channel, like the video, leave any comment, and be sure to subscribe to my Telegram channel, Pichi News. The link to it is in the description of this video. So, what happened today and why exactly today? Formally, everything is straightforward. The Hong Kong Stock Exchange delisted China Evergrande Group shares as of August 25th after an 18-month trading halt. They were frozen when a Hong Kong court issued a liquidation order for the company in January 2024. The shares hadn't traded for 18 months. The exchange completed the delisting, closing one of the largest SOGs in China's housing market. One more thing, the company itself confirmed that it would not appeal the exchange's decision. The exchange notice gives a straightforward reason. The company did not meet the requirements for resuming trading. Now let's go back to the beginning. December 2020. Chinese regulators introduced the infamous 3 red lines, a set of strict limits on developers' debt load to stop the industry's credit frenzy. Let me explain. China is governed by communist authorities. They decided that they could hand out huge loans to any companies so that they would create a boom in the market, not just in real estate. And in this way, they expected that the economy would just explode, just take off like a rocket. But it turned out that these loans, well, they took out a lot of them, and then these bubbles started to burst. Economists said these rules completely changed access to financing. Those who violated all 3 Evergrande thresholds, the first of them, lost the ability to increase their debt at all. Then came the swings of 2021. First, Evergrande warns about liquidity problems, then it defaults on offshore bond payments, and then an avalanche hits the entire real estate sector. Since the beginning of 2021, developers responsible for up to 40% of housing sales in China have been defaulting. China's construction projects are stalling, sales and suppliers aren't being paid, and the sector is grinding to a halt. It's just at the peak of decline. 2022-2023 is really the peak of the collapse. Auditor departures, asset revaluation, criminal cases, and Evergrande founder Hui Kadian's house arrest. Details are leaking that the figures in the reports were inflated. The market sees the same situation. That is, these are unfinished neighborhoods, huge neighborhoods that are unfinished and will not be completed. Millions of buyers are waiting for the keys to their apartments, but they will never get them because construction has simply been frozen. At that time, the situation was assessed as about 20 million unfinished apartments across the country. It's not just Evergrande, there are 20 million apartments. Then the climax. On January 29, 2024, the High Court of Hong Kong issued an order to liquidate China Evergrande Group. Attempts at restructuring are considered to have failed. On the same day, the stock exchange suspended trading not only of the parent company, but also of Evergrande New Energy Vehicle and Evergrande Property Services. From that day, the 18-month countdown to today's delisting began. The bill for investors is sober and unpleasant. At its peak, Evergrande's market capitalization reached about $51 billion. By the time trading was halted this week, it was a mere few hundred million. Once again, Evergrande's market capitalization at its peak was $51 billion. Today, it is valued at $282 million. And now it's all delisting. So the company is gone, meaning the company just collapsed. For offshore creditors, the situation is even harsher. In 18 months, the liquidators managed to realize only $255 million in assets, while the stated claims amount to $45 billion. As you can understand, that's just dust. All illusions that now all of Evergrande Corporation's illiquid assets will be sold off and there will be enough money for everyone who lent to this company have been shattered. The Financial Times described this beautifully. The liquidators' list of fines includes things like a Monet painting worth hundreds of millions, but the recovery on obligations is just a few percent. And the newspaper calls this a turning point for the real estate sector. The collapse of the largest private developer became a checkpoint, after which offshore holders started pricing in almost zero recovery. In other words, trust in Chinese developers has collapsed. Now, let's look at the bigger picture. How does this affect China's economy? Let's begin with the obvious but important point. That's the size of the real estate sector in China. According to estimates from the International Monetary Fund and other institutions, real estate directly and through related industries accounted for up to a quarter of China's economy. Next, I'll quote a statement from the International Monetary Fund. Real estate accounts for up to 20% directly and much more with multipliers. The analysts at Breaking Views put it more simply. The real estate sector accounts for a quarter of China's gross domestic product. When such a giant falls, the impact spreads across three circles. The first is households, ordinary Chinese people. In China, housing is the main safe for family savings. That is, this is how they invest their money. Declining trust in developers is hurting sales. Buyers are cautious, prices in second and third tier cities are falling, and pre-sales aren't helping. Who will pay for square meters if getting the keys has basically turned into a lottery? There's no guarantee you'll get anything from investing in housing construction. The second issue is local budgets. Land sales are the key source of income for the province. Developer demand is dying, revenues are collapsing, debts are growing, financing platforms, and so on. The third one is banks. Formally, the overdue rate is modest, but profitability faces pressure. Margins are shrinking and loan demand is weak. In short, the banking sector is declining. A separate pain is unfinished construction. It's not just about deceived buyers. These are frozen construction sites, broken supply chains, and lost jobs. Once again, about 20 million unfinished apartments across the country. It's a huge number. And just to complete what's already been sold, 20 million apartments, it would take hundreds and hundreds of billions of dollars. And Evergrande officially has less than 300 million left, while Beijing is pressuring with interest rates, mortgages, and special construction funds. The impact nationwide is uneven. And here we come back to today's delisting. You know, this isn't just some other piece of news. This is the official closing of the door. It's a signal to the market that there will be no rescue for this particular group. Offshore holders are locking in their losses. The policy courses are moving further toward a long, tedious, so-called sanitation of the sector. And now the International Monetary Fund has lowered its growth forecast for China to 4% for 2025, specifically noting that prolonged pressure from the real estate sector will be significant. How is Beijing addressing this problem? Over the past 2 years, dozens of measures have already been introduced. These include lowering the minimum mortgage rates and down payments, as well as easing restrictions on purchasing a second home, bank quotas for lending to developers, special refinancing lines for completing unfinished projects that remain, and pilot projects for purchasing surplus housing for rental purposes. Regulators are generally debating whether to print more money to inject funds into the economy and save everyone, or to clear out bad assets and accept a smaller role for the real estate sector in the economy. What about investors and why? This is important for Ukraine, the European Union, and the United States, who view China as the world's second largest economy. First of all, delisting wipes out the last hope for a revival of trading and a miraculous economic growth. Secondly, legal battles will now move into a long offshore corridor where onshore creditors and home buyers have priority, while offshore holders are simply at the end of the line and are unlikely to get their money back. What do you think about them? Well, is there any trust left to invest in the Chinese economy after that or not? Thirdly, this is nonsense. The listing ends the chapter, but the sector's debt issues persist. This means that in China they have finally acknowledged that the real estate sector has collapsed irreversibly. Is there any silver lining in this for Beijing? Strangely enough, there is. The pain is concentrated in the private sector like Evergrande, and there's also Country Garden. These are still private developers. It clears the way for state-owned players. There are companies like Vanke, Poly, and China Overseas. And now these state-owned companies will try to pick up liquid assets and clear out the mess. As you know, this isn't a quick cycle. China was actually lending to companies like Evergrande. Then it admitted its own failure and now will have to somehow deal with all these problems at the expense of the state budget. However, buyers now don't think it's worth purchasing an apartment before it's completed. Once again, after the liquidation of Evergrande in China, there are 20 million unfinished apartments in China, square meters once again. It's not just an asset, it's also, a kind of social contract. As long as the unfinished buildings haven't been turned into apartment keys, trust can't be restored. That's why the main key performance indicator for Beijing is no longer price growth, but the number of completed projects and the time it takes to get the keys. This means they'll have to drastically lower prices just to try to reduce the panic somehow, and delisting is part of the game. China's big economic bubble today. You, for example, Jones? Some kind of Murnau. But it's important to understand that for the economy, this is not the end, it's a long repair. Whether millions of stalled apartments are quickly finished and bad assets carefully removed will decide if the world's second largest economy has a soft landing, or if we'll see more to come. It's the biggest delisting in many years, like what happened with Evergrande, so it's clearly a blow to China's economy. Those who followed the Evergrande story have finally seen the end of it. I'm not putting an ellipsis here, I'm putting a period. Share your opinions and conclusions in the comments below this episode. Subscribe to the channel, hit the bell, and don't forget to like. That's all for now. Take care of yourselves. Goodbye, everyone. Bye.